Friday, the 18th of July, 2017. Welcome to the program. This is Business Morning with me, Bolson Amafaye. We're live to you from Channel's global headquarters in Lagos. We welcome our viewers here in Nigeria and around the world. Nigeria's Tier 2 lender Skybank today issued a one full-page newspaper advertorial speaking in an 8-paragraph statement that the management of the bank is preparing for the future and has appointed a very reputable investment bank as financial advisors for its proposed recapitalization program. In simple words, it means Skybank is going for a recapitalization. That means its capital adequacy is inadequate under the central bank's regulatory or regulation. That's what the notice means in simple words. Now, it went on to say that the advisors, that's the financial advisors, quote, have identified the various options open to the bank for recapitalization and that the proposals have been sent to the Central Bank of Nigeria to consider accordingly. The Skybank went on to say that its financial accounts for the year 2016 has been submitted to the Central Bank for approval. And given the financial position of the bank, it says it has fully divested 4 local subsidiaries, realizing a total cash value of 6.2 billion naira, and is in the process of divesting from other subsidiaries. The lender went on to add that recoveries of bad debts over the past 1 year stands at 60 billion naira, while a settlement restructuring agreement has been reached with many of the bank's chronic bad debtors. So that's the story. This morning, flagging off the program for you, a full-page public announcement from Skybank, one of Nigeria's Tier 2 lenders listed on the stock exchange, announcing plans before the regulator to recapitalize, saying there are various options that are available and that may soon be unfold. Of course, it's 1 year since the Central Bank of Nigeria is on board to manage the affairs of Skybank. Of course, you also saw the exit of 4 former executive directors of the bank a couple of months ago. This is one story that is on the street as we speak, and everyone is following that very closely. Let's step into the market. Yesterday, the financial regulator, the central bank, threw $195 million to start a brand new week into the FX market. The wholesale window got $100 million. The small and medium enterprises window got $50 million, and the invisibles, where you have the BTAs and PTAs, as well as the medical payments and tuition fees, got $45 million. This topped about $396.8 million in FX interventions that the central bank did last week. We're going to talk about this a little bit more on the program with some of our guests here in the studios today to chew through the country's macroeconomic position in the first half and what's the outlook for the second half of 2017. At the marketplace, at the investors and exporters window, the local currency was up 0.17% Monday to start the week. 362.21 was where the naira finished off against the US dollar. At the interbank over-the-counter market via the FMDQ platform, the naira was flat on the dollar, 305.90, 411.05 against the pound sterling. That's about 0.3% to the north, but was largely flat, a bit lackluster on the euro, 361.03. At the parallel market, what's called the street market, the naira was flat on the dollar and the euro, but gained about 0.5% against the British pound, 470, as the market finished off from Monday. The stock market started about 0.1% in the green in the brand new week. That's the figure. We're back at 33,000. We're just creeping very slowly since the 1st of July. It's not as aggressive as we saw since April to the end of June. The market cap are creeping also north, so we added a few billions yesterday in local currency. Less than 4,000 transactions. In terms of total volume, when we're just about average, around 320 million for 2.73 billion local currency. The sectoral performance. Bring it on, folks. Let's see the top 5. Okay, here we got 3 reds and 2 green shoots. The consumer goods was up 1.29%. Market is still digesting the very positive full year 2016 of Unilever. That better than expected numbers from that consumer goods giants. The industrial goods added a very small 0.03%. The banks down by 0.5%. And of course, the market was down 0.5% on the oil and gas. We're chewing over Oando stock market position and Forte Oil making a comeback in a few minutes on the program. Stick around. Insurance followed their cousins, the banks, in the red, 0.60%. The unlisted securities market via the NESD was much better than the stock exchange, the Nigerian Stock Exchange, 1.71% in the green. That's a very solid Monday. And the market cap at the doorsteps of 420 billion naira. In volume terms, quite a very decent, 36,584, considering the size of that very small market. You can see the value there, and the total transactions, just 22. Finally, for the market round, on the day, we got in the latest inflation data on the street. The central bank conducted an open market operations to start a brand new week. So we got the FMDQ OTC Securities Exchange FGN bond, a bit of a lackluster Monday, 1.9 billion in total. Look at that, very, very small for those mid to long term. The longest, 2037, year 2037, paper maturing 18th of April. Just 200 million naira into transactions. Flip that and look at the treasury bills, and that was quite interesting and quite big for a very decent day. 146 transactions in the treasury bills maturing 10th of August 2017, a discount high of 17.60%, 37.25 billion in that single treasury bills. 432 transactions in total for Monday, for 111.42 billion naira. All of the markets, but today, on the economic side, we had June inflation report. Then on the market side, of course, we had the FMDQ admitting the infrastructure debt fund. But let's look at inflation, which is the big story for